Hello, good morning, traders and investors. Welcome back to our morning trading recommendations channel. Before we dive in, remember that everything we discuss here is purely for educational purpose. Make sure to do a research or consult a financial expert before making any investment decision. Now let's starting off with the commodities update. The overnight soybean oil for the May month contracts dropped 0.18 point to close lower at 46.07. The market is on holiday today for the US market and will be reopened on tomorrow. Yeah, well, and the Dalian's active forward contracts rose 56 points to close higher at 9068 on previous night sessions on last Friday night. Malaysia crude palm oil futures closed higher on Friday, marking their fourth consecutive weekly gain, driven by the lower stock level despite concern over demand and uncertainties regarding the Indonesia biodiesel mandate. The FCPO May month contracts rose 42 points to close higher at 4499. Just as information, the actively traded FCPO contracts has switched to May month contracts starting today. On the daily charts, the contracts remains in the wide range of the sideways consolidations, with a downside bias trading struggling to break above 4645 to 4650 range, which is the top of the consolidations, and forming the lower highs. If we're referring to the hourly chart, it's more clear that we can see the lower highs and indicating the continue of the downside bias trading. In the hourly chart, the price is consolidating within an upward channel. If you see, here's the upward channels forming over here. Is the key support. First one, if today May month contracts opened, we likely to see a gap down. In the charts, in the third month consecutive chart, with the support first one we see at 4490 to 85, which is also the nearing the closing level on last Friday for the May contracts. If this level hold, we might see the buying opportunities. But the formations is more on the downside bias with the descending triangle spotted. If the price open over here supported, we might see some buying opportunities. However, the upside likely to be limited. We see the resistance at 4540 to 4535 range over here. If this range not able to break above, then we might see the selling to triggers in this level. However, if the markets manage to break above this range, then we might see the price to coming up. Alright, so if the support levels for 490 to 85 years not able to hold, during the openings, we might see the corrections towards likely towards the first another support level at around 4460 range, and the next one the crucials 4425 to 30 range over here. So this is quite a strong support range for this sideways consolidation. It serves as a middle of the range, right? And just stay alert with the potential sentiment change. Recommendations for the entry points: long position may be open above 4491 with the target to set at 4517 to 4541 and the stop loss to set at 4471. Alternatively, short positions may be open below 4491 with the target to set at 4468 to 4446 and a stop loss at 4511. Next, we're shifting our focus to the index market. The overnight Dow Jones market dropped 165 points to close lower at 44546. Wall Street stock closed mixed on Friday, with the Nvidia rising while Microsoft edged lower. Meanwhile, the Treasury yield declines a day after former U.S. President Donald Trump announced reciprocal tariff plans but refrained from imposing new ones. The FKLI benchmark index, FMKLCI, closed flat as a mixed sentiment influenced the buying pattern following Bank Negara release of the fourth quarter GDP data on Friday. Malaysia economy expanded by 5% in 4 quarters on last year, surpassing the both market expectation and the official advance estimate of 4.8%. FKLI February month contracts dropped 6.5 points to close over at 1592.5. So in the daily charts of the FKLI contracts, last week it faced a resistance at the area of 1604 to 05. It is quite a crucial resistance range, and the market's coming down. The price seems remains consolidating. After the uptrend, the market is consolidating, and we see the doji signs over the resistance area. This is quite an important sign that the market is in the reversal patterns. New support for the index markets we've seen at 89 to 88. So at the moment it's trading at the support range. If this level not able to hold, we may see the markets coming down to the 85 range for the first one, and likely to see some buying opportunity over here with limited upside, as the market is currently on the more on rebound sell patterns. Upside also limited. Just beware of any sentiment change. So here's our view for the morning sessions. And as we wrap up the analysis, keep in mind that market is ever changing. Successful trading requires both seizing opportunity and managing risk. Stay adaptable to market change, protect your capital, and trade wisely. Wishing you all safe and successful trading. See you in the next update, and happy trading.